Most people first hear the word IRMAA and think, well, that's my grandma's bridge partner. No offense if your grandma's name was or is Irma, but we don't like her, and no one does. Not your grandma, of course. I like her. Just the name, IRMAA. Because IRMAA, the income-related monthly adjustment amount, is the one part of Medicare that makes retirees furious. You've paid into the system your entire working life, and now suddenly the government says, congratulations, you made too much money. Pay more. It doesn't matter if you're on a fixed income or if that extra income came from a one-time event, selling a stock, converting an IRA, or finally retiring. One small blip can trigger hundreds of dollars a month in new Medicare premiums. Stick with me because I'm going to explain why this happens, what you can do about it, and 2 ways to fight back. Number 1, the official appeal form you can file with the Social Security Administration. And number 2, a legitimate service I personally partner with to help people fix IRMAA surprises. And yes, that's an affiliate partnership, which means if you use my link, I may earn an affiliate commission. No pressure, no obligation. It just helps support this channel. IRMAA stands for Income-Related Monthly Adjustment Amount. Basically, a surcharge tacked onto your Part B premium and your Part D drug premium, even if your drug coverage is built into a Medicare Advantage plan or an MAPD plan. It's not a penalty for making a mistake. It's the government's way of saying, well, you don't need as much help paying for Medicare as everybody else. Here's the kicker. It's based on your income from 2 years ago. So your 2024 tax return determines what you'll pay for Medicare Parts B and D in 2026. That means that the financial decisions you make right now, before December 31st, and every December 31st on after, can affect your Medicare premiums 2 years down the road. Here's a quick history lesson. IRMAA was created back in 2007 under the idea of means testing. The goal was to have higher income retirees pay a little more towards the Medicare Trust Fund. Well, it sounds reasonable until you realize how it works. It's not a gradual increase, it's a cliff. Go $1 over the line and your premium can jump hundreds of dollars per month. So yes, IRMAA was designed for the wealthy, but in reality, it catches teachers, engineers, small business owners, and retirees who saved responsibly and invested responsibly. That's why so many people see it as unfair. And that tip, IRMAA doesn't look at your lifestyle. It looks at your modified adjusted gross income straight from your 1040. Here's how the $1 trap works. Let's say you file single and your modified adjusted gross income for 2024 is $109,001. Or let's say you are married and file jointly and your modified adjusted gross income for 2024 is $218,001. In both cases, that one extra dollar pushes you into the first IRMAA bracket. If you file single, that $1 pushes your monthly Medicare Part B premium up by about $82, and it pushes your monthly Medicare Part D premium up by about $15. If you're married and file jointly, double those amounts. Between the two of you, that's about $164 more for your Medicare Part B monthly premiums and about $30 more for your monthly Medicare Part D premiums. That's almost $200 more a month for a married couple just for that $1 miss. Even if you have a $0 Medicare Advantage plan, even if you have a 0 or a low premium standalone Medicare Part D plan. No warning, no letter ahead of time, just a bill from Social Security that says your Medicare premiums are now a few $100s higher each month. And I'll say it again, it hits both your Medicare Part B and Part D premiums. So that $1 mistake can cost you $2,000 to $3,000 more per year. And that's just the tip of the iceberg, because what I just explained is only the first tier of IRMAA, and there are 5 tiers. In the worst case scenario, some people could end up paying $800 for their Medicare Part B and D premiums every month if they're single, and $1,800 if they file jointly per month on top of any Medicare Advantage, Medicare Supplement, and Medicare Part D premiums. So, Why is IRMAA hitting harder in 2026? Well, the standard 2026 Medicare Part B premium is expected to land somewhere around $206 to $207 per month, and the dollar amounts that trigger IRMAA brackets haven't moved much. So, more people on Medicare will likely be pushed into their IRMAA than ever before, not because they got rich, but because their 2024 income ticked up a little. Here's why this may have happened to you. Inflation adjustments didn't keep pace. I mean, let's be honest, the 2026 Social Security raise of 2.8% is pretty laughable for any one of us who'd been to the grocery store and watched our household bills climb over the last year. Another reason, required minimum distributions may have just kicked in for you. And a lot of people did Roth conversions or sold assets when the market was up. Matt tip, IRMAA hits the people who did the right things, saved, invested, planned, but forgot that success can show up as taxable income later. For the full chart with updated 2026 numbers, I'll post that on prepareformedicare.com. All right, here's the good stuff, how to fix it. Option number 1, file an appeal yourself. If your income dropped because of a life-changing event, Social Security might reduce or remove your IRMAA penalty. That includes more than just retirement. Things like loss of a job or major income source, marriage, divorce, or the death of a spouse, loss of a pension or income-producing property, or a one-time income spike from a stock sale or Roth conversion that won't repeat. Use Form SSA-44. You'll find it on ssa.gov and on Prepare for Medicare website. And you got to include proof like a retirement letter, 1099 showing reduced income, or documentation of that one-time event. If they agree, they'll recalculate your premiums and refund you what you overpaid if you did. Matt tip, don't wait. The appeal clock starts the day you get your IRMAA notice. You miss that, you're stuck paying it for the year. Option 2, get help from a specialist. If you'd rather not handle the paperwork yourself, you can get help. I've partnered with a team of specialists helping retirees appeal and plan around IRMAA. Full disclosure, it's an affiliate partnership, which means if you book a consultation through my link on prepareformedicare.com, I may earn a referral fee. Again, it doesn't change your cost, it just helps fund more videos like this one you're watching. If you're still working or you're retired but not yet drawing Social Security, this is your window to plan. Watch your Roth conversions and capital gains. Spread large distributions across years if you can, and know your thresholds before your tax return locks in. If you want help planning, again, that's where my affiliate relationship comes into play. It's prepareformedicare.com/IRMAA. Because once the IRS sends that data to Medicare, there's really no, oops, can I take that back? Here's the bottom line. IRMAA isn't a punishment. It's a policy, but it feels like a punishment, especially when you've done everything right. So don't ignore it. Plan ahead, appeal it if you qualify, and don't pay more than you have to. If you found this helpful, hit that thumbs up button and subscribe to Prepare for Medicare. It helps more people find accurate Medicare information instead of a lot of the junk that clogs YouTube every fall. And tell me in the comments, did you even know IRMAA existed before this video? I'm Matt Ferret, here to help you make smarter decisions about Medicare and retirement and save time and money along the way. Until next time, here's to your wealth, wisdom, and wellness.